Hey, how to make money on Robinhood. Let's go. Today's video, we're going to break down the Robinhood chart and where we can make our next best trade at. We're going to talk about the last 4 candles. We're going to break down the body of work, and we're going to say, well, can we enter the best trade at to make money on Robinhood? Knowing that it came off an all-time high, a lot of people going to run after that, and that's what them big dogs, that's what them whales, that's what that smart money be waiting to snipe us and take us out. Hit us for our stop losses, take our money, turn us into liquidity. But we not gonna do that on my watch. So we're gonna break this chart down. We're gonna go from the 1 hour, we're gonna go to the daily, we're gonna look at the monthly, and we're gonna truly execute on this play. Now I need you to stick with me because I'm gonna show you exactly where the smart money will strike. Because that's who we are, man. It's your boy, the Wall Street Trapper, man. Make sure you get your pen and your pad so you can watch this as I'm marking it out and pay attention to it, man. I want us to make this money together. I'll go to help you turn your last name into an asset, man. We do that together as a family. Let's get into it, man. All right, so right now we're looking at this Robinhood chart, man. We on the 1 hour. Now, of course, we're going to move some things around. First thing first, Trap, why are you looking at the 1 hour chart? Well, I look at the 1 hour chart because that's the chart I like to use to execute. So I look at my monthly, I look at my weekly, I look at my daily, I look at my 4 hour, and then I look at my 1 hour so I can execute because I'm a swing trader, right? So I do a lot of trades that's 90 days out, 4 months out, 5 months. Then I get into the leaps going into 8 and 9 months. But today we're going to break this down. So the first thing we're going to do is because we're going to execute on the 1 hour, I usually have most of my markings on the 1 hour. So the first thing we're going to do is we're going to get on hour. Right now we are using TradeView, right? We're going to mark out our all-time high. We're going to mark out our all-time high. And I know my favorite saying, before you move right, you got to look left. Because if you understand left, it's going to tell you how to move right. So let's go. So the first thing we're going to do is signal out our all-time high. And then once we do that, we're going to write that on there. We're going to write on there. We're going to write on there all-time high. That way we know exactly what we're getting to. Now the next thing we're going to do is we're going to say, okay, we're going to go to our daily chart right quick. Now we're going to go to our monthly. We're going to give it in sequence. We're going to go to our monthly chart right quick. Now as we go to our monthly chart, because we are in September, what we want to do out right now is go, watch this. We want to write out what was the previous month's low. What was the previous month's low? Boom. Now we're going to change the color on that. We're going to turn that blue. And then we're going to write on it PML. So now we got that wrote out. You know, it's the previous month's lowest. And the next thing we're going to write out is previous month high. All right, so now what we know is based on last month, we know that was the previous month's low and the previous month's high. Why is that important? Because if we can box out the range, what a stock has been in the last month, we good. That's the range and that's the parameters that we going to trade around. So the next thing we're going to do is we're going to go to the weekly. We're going to go here, same tool, change it, previous. We're going to change the color. We're going to make that color this little crimson color or pink color, whatever it is. And we're going to put previous week's high. And then we're going to come right here. We're going to go previous week low. So now that we know that, we can see that. We boxed in, we see what we got going on right here, right? So we got our all-time high, previous month high, previous week high, previous month low, previous week low. So then we go to our daily. Now, I'm going to be honest with you. Once I know that where that's at on a monthly, I can take my monthlies off. Right. Once I understand that, I ain't gonna lie, I can take my monthlies off. Even though that's cool, I can take my monthlies off, but we're gonna stretch it out a little bit because we just wanna know what's going on. So let's take this previous month high. We're gonna move that to our right over here. All right, so we got our all-time high, we got our previous month's high, we got our previous week high, previous week low. Now we on a daily, so we good. Now we go to our daily chart. Now what I'm gonna do is I'm gonna take my month's highs off. I'm going to take my month high off because it's up there. And I'm going to go with my daily because I don't want it to interfere. So let's go with our daily. And I'm doing this for a reason, y'all. I'll turn that green. Now, that is my previous, that's yesterday's high. And then we mark it again. previous day low. All right, let's mark that one so I can see what's going on. So now we essentially did is we've now boxed this chart up. You looking at this now, you like, wait, it's kind of making a little sense to me now. I got some parameters in place, right? I got some parameters in place. I can see some things. So here's what we're gonna do. Let's get into it. So the first thing we're gonna notice is this gap right here, right? We had a gap up. So the first thing I'm gonna do now on this daily is say, hey, I need to mark this out. Well, trap, why do I need to mark that gap out up? Because that is what we call a liquidity zone, right? That's a liquidity zone. And what that simply means is that tells us that's where the big dogs get money at, right? So the one thing we got to realize is that the market is always looking for some form of liquidity. So you hear people say, don't become liquidity, don't become liquidity, because the market needs buyers and sellers. Because if they got buyers and sellers, then sellers are looking to stop people out. Buyers are looking to stop people out, and they're looking to take that money. So that gap right there represents orders that are sitting right there that didn't get filled up. So if you look at it, think about it like this. There's always, the reason why stocks go up is somebody's always buying at these prices. Buy. And the reason why stocks go down is people are selling at these prices, right? So because people are buying at these prices, the market keeps going up. Well, what happened was overnight, those orders that were sitting at that price got skipped. So these orders couldn't take place once the market opened up, they couldn't get filled. And so because they couldn't get filled, they got skipped over. And because they got skipped over, they missed all that run up. So now they still got those orders sitting right there, waiting to be fulfilled. But the market has been on a run. So we see that and we like, okay, that's good, right? We understand that. Now, the next thing I want to put on here is I'm going to bring this down a little bit because I'm going to show you something right here. All right, I'm gonna create I'm gonna get a yellow line. I'm gonna use my ray, my horizontal ray, and I'm gonna turn this yellow. I'm gonna use the little turquoise color. Now that's at 110.12. So Trap, why did you mark that out? Well, I marked that out because you see that little bitty wick underneath there? Well, that little wick is a rejection. Now notice two things right here. Notice how that 110.12 is right on top of our box. The 106.03 is the rejection, and then the 110.12 is the rejection from the seller. So the buyers rejected, the sellers rejected 106.03, got skipped over, and then the buyers rejected the 110. They were like, we ain't going that far down. We going back up. So that whole box becomes liquidity. Now, 110.12 becomes what you call a demand shelf. Now, let me make that make sense to you. It's like a support, but it's almost, because it got rejected, we know for a fact that there's orders sitting under there because that wick tells us that it was rejected. There's stop losses sitting right there. And what that means is you want the sellers, the buyers of Robinhood, to hold above 110.12. You want them to always hold above 110.12. Why? Because now if it breaks below 110.12, what happens is it now comes and take these orders, and it can fuel these orders to go down, or it can fuel these orders to come up. But a lot of times, if Robinhood comes back down to 110.12, we want to see if it breaks it with a candle or if it does it with a wick and rejects it again. So that's going to be a good number that's a good number for us to watch. And remember, you don't got to use a lot of indicators, but for me, I like to use key levels, right? So key levels become important for me as a trader because that helps me understand where the market is trying to go, where's the liquidity at, right? Another thing we want to add on this chart right quick here is my SMA 20. Why? Why the 20, Trap? Because I'm more of a bullish trader. I love to see the market above my SMA 20. Because if it's above my SMA 20, then that tells me buyers are now in control. That means the last 20 days, buyers have fluctuated this above this price. So SM 20 is 117.23. So we want to say it stay. We want to see it stay above 117.23. You write that number down. 117.23. That also becomes sort of a support level. And it's a support level because you'll see the market will push it down to that SMA 20, and then move that moving average 20, and then go back up. They're going to bounce and go back up. You'll see that if it breaks below that, now we're into another zone. So those are the things that's all we're looking for on the chart right there. All-time high, which is a liquidity. Why? It also acts as a resistance. Why? Because most cases, 80% of the time, when markets hit an all-time high, they fall back down, right? And so now you have liquidity. Watch this. I'm about to tell you something that's smart right here. All on top of here, you have liquidity. You'll see the market do something like this, snatch that, and then come back down. Why? Because they know that people got stop losses right at 123.44. They know a lot of people got stop losses at 123.44. A lot of people who plan puts on the downside. Once it hit all-time high, they're like, hey, I'm going to put my stop loss right back at all-time high. Why? Because that becomes resistance, right? And so what the market will do is go right past 123.44 and come back down. Take that money, come back down. Why? Because all those stocks become what? Fresh money. I call that on robbery, right? Become on robbery. Or it'll take those stops and just keep going up. But the market knows that there are stop orders right there. So that's what the market does. That's when you start to think like a big dog, right? Once you start thinking like a big dog, you start understanding how big dogs move. All right, so let's mark this out. So anything below our previous day low of 113, now we saying this pushing to the downside. Now, let's make this make sense. I want you to make, I'm telling you some things so you can see it on the chart. The chart is not all marked up. You've seen it on the chart. You've seen it really clear, and we can move past that. So watch this. This 118.63, you see Robinhood has now broke below that 118.63. These last candles that we see right here, let's draw this out. And we doing this in real time while the market going. This represents what we call buyer exhaustion. Now you got to think about it. Buyers made this whole run. They had this buying pressure here. You had some consolidation right here. And then you went here. You had a gap up and you came here. That's a big move from 110 to 123.44 is a lot of buying power. It's a lot of buying pressures. Buyers stayed in control. Well, they got a little exhausted. They're getting a little tired. So how do you know they're tired? And one of the things I'm going to show you right here is it's a concept called candle under candle. That means you have a candle opening under a candle, opening under a candle, opening under a candle. So you have now candles that are opening underneath one another, which means buyers, sellers are in control, but you still have an overall uptrend, right? You still have an overall uptrend, but the sellers are now just like, yo, the buyers are exhausted right now. So the sellers are in control right now. We like that. We're not even mad at the sellers being in control. Hey, get you some money, man. I'm not mad at it. Right? So one of the things we want to look at now, I'm not mad at the 118. I'm not mad at the 117.85 where it's currently at. Now, I am paying attention to 117.25. I am paying attention to that. 117.25, 117.21, I am paying attention to that because that is our what? 20-day moving average. We paying attention to that. But what I truly want to look at is the 113.76, which is our previous day low. Now, Trap, why is that number so important to you? Well, if we look right here, after this build out right here, right, you had some consolidation right here. After that consolidation right there, here's what you saw. The market popped out of that. Buyers jumped in and got crazy, right? So that's good. Well, at the bottom right here, where you see that previous day low at, you see that red and that green candle both touch that line. And then the remaining part of that move that goes from 113 to 123 is based off that base right there. It's coming off that base, right? So I want to see if we can hold that line. So 113.76. 113.76 is what we want to see. That's our sellers have taken over mode. So if we break 113.76, here's what we can look for. We want to see what it does at 110. Why? Because that is our what? Demand show. That's the shelf we're looking at. Now here's what can happen. We know it can come inside of here and get some liquidity and then go pop back up. So if it gets to 110, 113 is the number we really watching. 110 is the we going down. Now you might be thinking, well, damn, Trap, if we go from 118 to 110, that could have been the play I was in. 100%. 100%. Because for me, once you break the 117, I'm thinking you coming to 113 anyway. So that can be a small play for anybody. That can be a small play. Why? Because we see if they're going to push to that floor. Then you can stay in there because now you're creating what? Lower highs. Your highs are now you have a high, you have a higher low, then you have a higher low, then you have a higher low. That's telling us we in the downtrend, right? But what I'm looking at is, for me, if it breaks that, now here's what I want you to look at. We're going to throw out Fibonacci on that. We throwing the tools out there for y'all with Robinhood. So watch this. Because that move is predicated off this, that whole all-time high move came from there, right? We're going to use this Fibonacci right quick. Let's take this off so we can clean the screen up. Now, our Fibonacci tells us at 116.58, 116.75 is the halfway point of that range. So Robinhood, from its all-time high, comes down to 116.75. That is a 50% retracement. Means it has given up 50% of its move from the upside. That would be a great time to get in the Robinhood play. Well, why would that be? Trap is falling down. Well, remember, the market is not only just a psychological game, but it's also a game of numbers. That's what the part that so many people miss, right? So many people miss that it is a game of numbers. And the midway point, think of this of the line in the sand. Think of this of a referee, the price referee, right? So if it breaks this line, and remember we said 117, but 116.75 is right there. So if it breaks that 116 or it breaks 117, which is our 117.12 and 116.81, that's one tick away, right? So if it breaks that 116.81, which is the middle of our line. Let me do this to y'all so y'all can see it. Oh, that's it. Yep. So that 50% is 116.75. That's our line in the sand. That's our 50% move right there, right? So if we can break, if it hits 116.75, that would be a perfect move for us to get in Robinhood, right? If it comes in under there, now we saying to ourselves, okay, if it breaks that, goes to 113.76, now we looking at it like, okay, what you gonna do? Sellers are in full control. It now 113.76 becomes our base because it's back at that base from that entire up move. It breaks 113.76. Sellers are now in full control. They're in full control, right? Notice we had this big impulse run from here, this candle here. Let me draw a line on it so you can see it. This was the impulse move going all the way to the all-time high. This is the move that took us to all-time high. From all-time high, we bring it back down. We come down to 116.76. I would love to get in the move right there because that means it has retraced 50% from the all-time high. We can go back up. Now, if it breaks 117, my next move is to watch it at 113. So if I was to get into that 117, I will put my stop. Now my stop loss is going to get tricky because I can put my stop loss at 113 or 112 because they can easily snatch that money. But if it breaks 113, it's a good chance it's coming to 110. Why? Because you have the liquidity pool right underneath there, and 113 was another what pool. So now you playing a game, a tug of war, right? So if it breaks 117, you say, hey, either I'm gonna get out of it, wait till it gets to 110, or wait till it confirms. Now, here's what I want you to also understand. We're not looking for just wicks. We're looking for candles closes on top of it, y'all. So again, you got all-time highs up there. Now, here's one of the things I want to say to everybody. It's moves like this that make most retailers lose money because you're chasing an all-time high, not realizing that a pullback is in play, while the smart money, the banks, the institution, they're really on the other side being patient. They watching us move like that. They watching us move sporadically and all over the board. And they just like, yep, I'm about to snipe them. We don't want to be liquidity. We want to be riding with the money. So this is why I don't have a lot of like indicators, but I do have my lines so I can see where it's going. And let me take this off so we don't get confused by that. And once you start using that Fibonacci a little more, it's truly going to help you out a lot. But see, my chart don't be having a bunch of stuff on it. All-time high, previous day low, previous week high, previous week low. After that, I'm good. My SMA 20, I'm good. I'm drawing out my liquidity zones. I'm understanding where my supply shelves at, my demand shelves. I'm understanding where the liquidity at. Your goal as a trader is to understand where is the liquidity at. Where is the liquidity at? So here we're going to say best case scenario, if price holds right above 117, for me, 117.21 is above our 20-day. 116.75 is the number that we call. That's a halfway retracement. We would love to get in it right there. If it gets in at 116 and then it confirms us with a green candle, we're going to go back to the upside. I like it. But if it falls below that and it goes to 113, we know it's a good chance we probably going to go to 110. It's going to fall into that liquidity pool. If it goes that far, I'm willing to get in at 110. Right now we at 117.75. I'm not mad at, and I like what's going on. It's also September. The market been running, but it's in September, so we know some things can happen right here. We just got to be mindful of all those things. So that's what I want to do, man. The smart probability for us is just to let the price do what it do. If it hangs around 117, 118, we good. Gets into our halfway point, that's when we get ready to strike, y'all. That's the play I want to make. That's what I want us to look at, y'all. So before we get too far into this too, I want to say something, man. Shout out to one of my trappers in the Patreon. Hit 14,000. He said, "Hey, Trap, man, you got me at 14,000 on this one play alone." Listen, that's the type of move I like to hear, man. You know what I'm saying? So shout out to the Patreon. We have the Patreon link below. If you want to get in there, man, get in there, man. We do pre-market calls probably 4 times a week where we just chart the SPY, chart the S&P. We take out one ticker symbol, and then once a month, I do a live Zoom call to answer questions. So if you're in the top tier, that's what you do, man. Other than that, man, hit the like button, man, because that means a lot to us. Share this video out. That means a lot to us, man. And comment in the chat so we can see whatever videos you want us to chart, whatever videos you want us to break down. We want to do because we here to serve you, yo. It's your boy, the Wall Street Trapper, man. I love y'all. I appreciate y'all. I'll catch y'all on the next one. Trap wisely.